Jeff Bezos says he's leaving his hometown to be closer to family, but there might be another
Good morning,
reason.
David. Jeff Bezos posting on Instagram last night that he's leaving Seattle after nearly 30 years. He's going to move to Miami.
Right now, at this very moment, the man who built the world's largest online empire inside a Seattle garage is waking up in Miami. Not visiting, not on vacation, living there, permanently. And the city that watched him turn 5 employees and a book-selling idea into a $2 trillion company is staring at a hole in its tax base that no press release from City Hall is going to fill. Jeff Bezos. 29 years in Seattle. Gone. And here is the number that Seattle's current mayor does not want to talk about. $591 million. That is the exact amount Washington State was entitled to collect from Bezos under its 7% capital gains tax on his planned Amazon stock sales. $591 million that would have funded schools, infrastructure, and public services across Washington State. Washington collected zero of it because Bezos moved first, and Seattle's mayor, when asked directly about wealthy people leaving the state over tax policy, laughed, and then said one word: bye. Before we go any further, subscribe to the States Insider right now. Hit the like button. And here is your comment question. A city watches its most famous resident take $591 million in tax revenue to Florida. And the mayor's response is to laugh. Is that confidence or is that denial? Drop your answer below because I genuinely want to know what you think. Here is the sequence of events that every person in Washington needs to understand, because the timeline is the story. In 2022, Washington State passed a 7% capital gains tax on the sale of stocks and bonds, exceeding $250,000 in gains. It was the first time in Washington's history that a tax like this existed. Before 2022, there was no state income tax, no capital gains tax. Washington was, on paper, one of the more tax-friendly states for the ultra-wealthy. Then 2022 happened, and the math changed overnight. Jeff Bezos had been selling Amazon shares almost every year since 1998, billions of dollars worth. Through those sales, he funded Blue Origin, his philanthropic commitments, real estate purchases, and personal projects. It was a routine part of how he managed his wealth. Then in 2022, the capital gains tax took effect, and Bezos stopped selling completely. Not a single Amazon share sold in 2022, not a single share in 2023. He gifted $200 million worth of stock, a move that does not trigger capital gains tax, and he waited. In November of 2023, he posted on Instagram that he was moving to Miami to be closer to his parents and his Blue Origin rocket operations in Florida. It was warm. It was personal. It mentioned nothing about taxes. Then he established Florida residency. And the week that residency was established, he launched a plan to sell 50 million Amazon shares. 7% of $8.45 billion is $591,500,000. In Florida, where there is no capital gains tax and no state income tax written into the state constitution, that number is zero. Washington got zero. Florida got zero, because Florida does not take it. And Bezos kept $591 million that Washington's tax code was specifically designed to capture. That is not tax evasion. That is tax avoidance, and it is completely legal. But it is also the clearest possible demonstration of what happens when a state creates a wealth tax without accounting for the most basic variable in the equation. Wealthy people can move. And when the cost of staying exceeds the cost of leaving, the ones with the most to lose from the tax are the ones with the most resources to leave. Now here is the Mayor Wilson moment, and why it matters more than it might appear. Katie Wilson took office as Seattle's mayor in January of 2026. In April of 2026, she was at a public event and was asked whether Washington should be worried about millionaires and wealthy residents leaving the state over its tax policies. Her response was not a policy defense. It was not a revenue analysis. She laughed. And then she said, quote, "I think the claims that millionaires are going to leave our state are like super overblown. And if the ones that leave like bye." The audience cheered. Let us be precise. Wilson did not cause Bezos to leave. He left before she took office. But she is the current public face of the governing philosophy that produced the capital gains tax he left to avoid. And her public dismissal of wealthy residents leaving delivered as a punchline is a statement about how Seattle's leadership understands, or does not understand, the relationship between mobile capital and the city's fiscal foundation. Because here is what that laugh was actually dismissing. Washington projected the capital gains tax would generate hundreds of millions in annual revenue. The assumption behind that projection was that the people who would owe the most under the tax would remain in Washington and pay it. Jeff Bezos, the single individual who stood to owe the most, did not remain. He paused his selling behavior the moment the tax existed and established residency in another state before the first dollar could be collected from him. The tax that was supposed to finally make Washington's wealthiest resident pay his fair share collected nothing from him. And the mayor's response to this outcome is to say bye to the people who are still deciding whether to stay. Bezos is not the only name on this list. Fisher Investments, one of the largest independent financial management firms in the country, moved its headquarters from Washington state to Texas, specifically citing the capital gains tax and the state's shifting regulatory environment. Texas has no capital gains tax, no state income tax, and actively recruited Fisher's operations in a way that Washington was not positioned to match. Starbucks, Seattle's most iconic corporate brand, has been cutting 900 positions in the city while simultaneously committing $100 million and 2,000 jobs to Nashville, Tennessee. Different industries, different products, different supply chains, all arriving at the same answer about where the conditions are better. Washington still has approximately 100 billionaires. Every one of them has access to the same tax code that Bezos read in 2022. Every one of them watched what he did and what it saved him. And every additional wealth tax proposal moving through Olympia is another data point in the calculation that each of those 100 people is running right now. Here is what the fiscal math actually looks like when you step back from the political framing on both sides. Washington's capital gains tax was designed to raise revenue and reduce the regressivity of a tax system built heavily on sales taxes. That is a legitimate policy goal. The problem is not the goal. The problem is the mechanism. A 7% tax on capital gains only raises revenue from capital gains that are realized by Washington residents. When the realization happens in Florida, Washington raises nothing. And the highest stakes realizations, the ones involving Amazon founder level wealth, are exactly the transactions where the individual has the greatest financial incentive and personal flexibility to establish residency somewhere else before selling. The result is a tax that was projected to collect hundreds of millions from its highest value targets and collected zero from the most prominent one. And the political response to that outcome is not a policy review. It is a laugh and a wave. Meanwhile, the projected state revenue that depended on Bezos' Washington residency, estimated at up to $1 billion over the timeline of his planned stock sales, is now a number on a spreadsheet that says zero, where it used to. Project hundreds of millions. That is not a political opinion. That is what the SEC filings, the tax returns, and the Instagram post add up to when you put them in the same sentence. Jeff Bezos built something extraordinary in Seattle over 29 years. The city grew around him, the tax base expanded because of him, and the year Washington told him that selling his stock would cost him 7 cents on every dollar of gains above $250,000, he stopped selling. And then he moved. And then he sold. Buy was the mayor's word for it. $591 million is the number. This is the State's Insider. Subscribe to this channel to keep following what the numbers say underneath the headlines. Hit the like button to push this to more people. And drop a comment below. If you were one of Washington's remaining 100 billionaires watching this story unfold, what calculation would you be running right now? That is not a rhetorical question. The answer to it is going to show up in next year's WARN filings and the year after that. Stay informed, stay sharp, never stop following the money. I will see you in the next investigation.